Hi, this is Vijay Bambwani and I'm recording this video from the safety and comfort of my residence. I'm obeying the lockdown instructions and keeping myself and my family safe. I hope you are also adhering to the lockdown request and keeping yourself safe inside indoors. I recorded this video specifically to bring a very profitable opportunity, of course contingent and based on certain events if they do transpire. I'm talking to the opportunity provided by the lockdown, or rather the possibility of an extended lockdown in India. I read the news that the chief ministers of various states, especially the bigger ones, have requested the Honorable Prime Minister to extend the lockdown in the country in order to be able to fight the war against corona a lot more effectively. I completely agree. But then this extended lockdown will bring with it some own unique challenges that will possibly create certain ripples in the financial markets. Now these are likely to be some hardships that we as a nation collectively will need to put up with. But also remember, in addition to everything else, we are also householders. We as traders have the responsibility to put food on the table for 3 or 4 times a day for our families. So we constantly seek opportunities to able to generate some trading profits wherever possible with controlled levels of risk and if possible in the shortest periods of time. Now what really happens if the lockdown is extended? It very simply means that economic activity falls slightly further. A lot more stimulus will be required on the part of the government to keep the economy going. A lot more social welfare spending will result so that migrant labor, the poor, the below poverty line card holders are provided with food, and as per prudential accounting norms or double entry system of account keeping, every debit must be met with an equal credit. Otherwise, the balance sheet of that particular organization will not tally. So if at all some more welfare spending is required, that will create a little more deficit and therefore pressure on the USD INR. In my video of September 2019, I had stated that India would have to fight a 3-pronged war. 1. Reduction in taxes, which the Honorable Finance Minister Nirmala Sitharaman has done for corporate India. Second was to reduce interest rates, which the RBI in various tranches has done. And the third was to basically devalue the currency, let it find its own sweet level, and therefore push up exports. At that point in time, the problem of corona did not exist. But the hypothesis is still valid. I stand by that. As a matter of fact, I followed it up with a follow-up video on 4th of April 2020, wherein I said that the erstwhile chairman of SBI, Arundhati Bhattacharya, has recommended to the government of India that they print more unbacked currency and flood the market with money so as to elevate poverty and malnutrition and save many people from short starvation. All this points towards a weaker rupee in the coming quarters. Let us also not forget that the government might give a moratorium to the industry in terms of payment of taxes, payment of EMIs, payment of interest, etc. But along with everything else, we as a nation, both in terms of sovereign and in terms of corporate India, have external debt also. And when the rupee weakens against the dollar, repayment of that debt and even servicing that debt, by servicing I mean paying interest on that debt, becomes a little more expensive. And as it gets a little more expensive, it exerts a little more downward pressure on the rupee versus the global currency basket, which becomes a very real possibility. So, unfortunate as it may sound, an extended lockdown is likely to make the rupee weaker against the dollar. We have no way of circumventing this possibility. Unfortunate, like I said, it will be because every Indian, man, woman, and child is concerned about the buying power of the rupee. Maybe 5, maybe 6% of the people are worried about what happened to the headline indices in the equity markets because they are directly or indirectly through direct investments or indirectly through mutual funds invested in the stock market. Just 6% max. But 100% of the Indian population, man, woman, and child, has a direct exposure to the rupee and its buying power. That unfortunately might just erode a little. Now we can either lament or grab the opportunity to earn some profits and mitigate, or to that extent blunt the pain of the falling rupee versus the dollar by making some trading gains. This, my dear friends, is my trading strategy. Now that the lockdown is likely to be extended, the formal announcement will come soon. By the time you see this video, it would have in all probability been announced as well. If it is announced, and if my trading parameters, my trading screen, my technical charts, etc., justify doing so, I would recommend to my WCA subscribers in that event to go long on the USD INR and mitigate some of the hardship provided by the extension of this lockdown. I assure you, I will be looking out for other profitable opportunities similar in nature, and there are many more updates to follow on this front also. Before I sign off from this video, may I request you to click like on this video if you're watching this on YouTube. Also in the comment section, do let me know what you think about this video and what further topics you want me to cover in my forthcoming videos. Do not forget to share this video with your family and friends and help me spread the cult of knowledge-based investments and trading. Also, join me on Equity Master's Telegram channel with the handle Equity Master Official, wherein Monday to Friday I post at least 3 to 4 updates every day, which will help you understand the markets better. Till then, take very good care of yourself, your trades and investments. Stay safe, stay indoors. I'll see you soon in my next video. Thank you very much. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.